Now, as the purses tighten, income is not guaranteed. Today on the show, I want to talk to you about 3 things that you can do when you can no longer afford life insurance premiums.
Welcome to the Wealth Nation podcast, a podcast for every mother, daughter, grandmother, sister, and wife, and the men who are smart enough to tune in. The Wealth Nation podcast brings you all you need to know about investments, business, property investments, personal finance, and all-around financial wellness. Here is your host, Yolanda Rose.
Thanks for joining me today on episode 46 of the Wealth Nation podcast. I am Yolanda Rose, wealth coach and financial advisor. Now, I help women and men all over South Africa with their personal finance, with their life insurance, and their investment products. So if you need any assistance or if you don't have an advisor helping you, feel free to contact me. I am doing free consultations via Zoom or Skype during the lockdown period. You can email me at yolanda@financiallyfabulousfemales.com. If you haven't checked out our website, go and check it out. It's www.financiallyfabulousfemales.com. Some great content in there, a lot of free stuff that you can use to get your finances in order and build generational wealth. Also, check out our YouTube channel, LinkedIn, Twitter, TikTok as well. Some awesome content that you can use, giving you great money tips to get your finances in order. The Wealth Nation podcast is sponsored by Audible. Audible is a seller and producer of spoken audio entertainment, information, and educational programming on the internet. Audible sells digital audiobooks, radio and TV programs, and audio versions of magazines and newspapers. For a 30-day free trial of Audible, go to www.financiallyfabulousfemales.com/audible. The contents of this podcast is not a substitute for personal financial advice. Please speak to your financial advisor before making any decisions from the information that you have gathered from this podcast. If you do not have a personal financial advisor, I am happy to consult with you. Please email Yolanda@financiallyfabulousfemales, and I will provide you advice based on your personal situation and circumstances. Now, I know times are tough. It's been a hard couple of weeks in South Africa with the lockdown. Income is not guaranteed. Businesses are slowing down. People are being retrenched. People are being terminated. But the bills have to be paid. So today on the show, I want to talk to you about 3 things that you can do when you can no longer afford your life insurance premiums. Now, let us understand what is life insurance. In a South African context, when we speak about life insurance, we're speaking about the regular life cover. When you pass away, the company will pay your family or your beneficiaries that you have indicated. They will pay them the amount that you wanted cover for. Then there is disability cover or income protection cover. This basically tells us that if our bodies are sick, well, not say sick, are hurt or damaged, or you're disabled and you can no longer perform your duties, whether it's for 7 days, whether it's for 30 years, you've got cover in place to protect you against losing your salary, because if your body can no longer work, you can no longer generate an income. And the third component of life insurance or risk insurance is dreaded disease or serious illness cover. This cover tells us that if you get cancer, heart attack, stroke, all of those major diseases and a wide array of a minor dreaded disease as well, there's cover in place. If I get cancer, or if anybody gets cancer, and if they have dreaded disease in place, there is money that will pay out to cover those extra bills, to cover the medical aid, to cover the gaps in income that might occur during that downtime for recovery. So when we say life cover, we're going to refer to it as risk cover, and we're talking about these 3 components of life cover, dreaded disease cover, and disability cover. Now, with the way things are with coronavirus, with the lockdowns, incomes are not guaranteed, and many of us are tempted to cancel this. Please do not cancel this. Listen to this episode. Share this episode with friends that are in the situation that are looking at canceling. I'm going to explain to you what your options are and how you can best utilize them. And I want you to understand the risks that are involved as well. So many of the companies, Discovery, FMI, they have this option where you can freeze your cover or suspend your cover. So they'll give you a time period, let's say 3 months, 6 months, where you can suspend your cover completely. So you have temporary relief where you don't have to pay your premiums. But here's the risk with that. If you freeze your cover, you do not have any cover in place. If you die, obviously your family won't get a payout, and what happens to the previous premiums you will be paying? All of that will be wasted if anything were to happen to you during this freeze period. So that's the risk that you're going to take. If things are that bad where you really can't afford it and you're thinking of canceling, you do have the option to freeze the cover during this time. Raising financially savvy children involves teaching them a variety of aspects, from budgeting to planning to earning and saving. Besides giving them an understanding of the value of a rand, teaching children about their fiscal responsibility helps prepare them for the real world. Financial literacy is a vital skill, and it is never too early to teach kids about money. Many parents wonder how they can teach their kids about money and where to find age-appropriate resources. You can now download my free financial literacy lessons for kids, particularly primary school kids, at www.financiallyfabulousfemales.com/finance for kids. This ebook provides you with sample lessons, activities, lesson plans, discussion points, and quizzes that you can use to test your kids' knowledge on the financial literacy program that I've put in place for your kids.
Like what you hear so far? Make sure you never miss a show by subscribing on Apple Podcasts, Spotify, or Tuned In. Now back to the show.
So that is the major risk that you take, where if something happens to you during your freeze period, you have no cover in place. And that's important because most likely many of us, the government has said that almost 60% of South Africans will contract coronavirus. So if you do contract coronavirus and you're down, there is possibilities of making claims on your disability cover depending on the type of disability cover you have in place. Now, if you have disability or income protection that has a low waiting time, and if you are put in mandatory quarantine by a medical professional, this is your opportunity to claim from your disability cover. And if you don't have that cover in place, what do? So you don't have to pay your premiums, but then again, you're out of work. You're out from work for a long period of time. And if you're in a career that will pay you, great. But if you're not, what will you do in this downtime? And there's no guarantee as to how long the recovery will take. The virus is hitting everybody differently. Your body is reacting differently. It depends on other cofactors, other comorbidities that you may be dealing with, and your health issues as well. So that is the risk that you take. The next option you have is to cancel altogether. Now, the problem with canceling is you've paid these premiums for a long period of time. And if you cancel, you're not going to get any premiums back because you have enjoyed cover for however long you've had your policy in place. So no company that I know of is going to give you your premiums back if you cancel. You just stop enjoying the cover that you have enjoyed, whether you've made a claim or not. That cover will cease if you choose to cancel during this time. The risk with this is that once you're back on your feet financially again, and if you do apply for a new policy, you have to go through medical underwriting. And then if you're older, medical underwriting can be very rigorous. They will ask for test upon test and upon test. And if you do have any healthcare complications, this will impact the premiums of your cover. So that this is one of the dangers of canceling your cover at this point. And this is the time when we need it the most because, like I explained with coronavirus, if you're down, if you die from coronavirus, what's going to happen to your family when they can no longer receive the income that you would have been able to provide? The third option that you have is to drop your cover. Now, a lot of companies, Discovery, Liberty, FMI, has given you the opportunity to drop the cover that you have in place, meaning you'll drop your premium amount to something that is more affordable according to your budget during this time. And with that premium drop, your cover will drop as well. Many companies have stipulated a minimum premium amount. So your cover will be adjusted accordingly and it will be dropped accordingly. Now, each company is different. They have a different set of rules in place. But the thing that you need to consider during this time, if you do drop your cover and if there are any complications in your health and you want to put your cover back up and reinstate your cover to what it previously was, there's going to be, in some cases, there's going to be medical underwriting again, depending on the rules of the company. And in other cases, there's going to be a health care declaration. So with that declaration, you gotta sign to say there's been no changes in your health. So in this time where you drop your cover amount or your premium amount, if you contract COVID-19, the chances of you getting your original cover reinstated are slim to none. Or if the company does choose to reinstate you, your policy premium is going to be loaded at a much higher premium than what it previously was. So listen to these three options again, from cancelling to freezing your cover to dropping your cover and your premium amount. These are the three options you have when you can no longer afford your cover. Listen to these points again. Try and understand how it affects you. Discuss these points with your financial advisor if things are that tight. But my recommendation to you is not cancel for the obvious reasons I have discussed. Look at the freeze cover option or suspended cover option and dropping your cover during that time. But please understand the risks of doing this. I am not in favor of any of these. Let your insurance premiums be paid first. Try and renegotiate your debt, but make sure your premiums are paid, because going back to work and going back to life as usual without your risk cover protection in place is like a fireman going to fight a fire without his fire equipment, without his hose and his fire jacket and his helmet. You're asking for trouble. So do not interfere with your cover. Make it priority, especially during this time, especially if you're the breadwinner. People are depending on you. Children are depending on you during this time. Don't go out into the world living life as normal and canceling your cover and think that there aren't going to be any consequences to that. So with those three options in place, I want to speak to you about something essential in your risk cover that has not been included. Now, we spoke about life cover, we spoke about a dreaded disease cover, and I want to touch on disability cover a little bit right now. Now, with the usual traditional disability cover is usually a lump sum payment where if I'm permanently disabled, I'll collect a lump sum, or if I break a leg and I'm in 3 months recovery, and whatever that recovery period exceeds 30 days, I will get a portion of that lump sum that I am insured for. Now, that's a very traditional old model of disability cover. And South Africa, we have a very robust financial system. I honestly think when it comes to financial services products, we're so innovative. The companies are so innovative. I know at times they don't seem to be fair. Now, if you are 35 years old, let's say you're earning 20,000 Rand a month, and if you plan to retire at age 65, 66, and a lot of people are postponing their retirement ages and they're working longer than 65. But if you do plan to retire at 65, you're earning 20,000 Rand a month, you're 35 years old now. From now to 65, your earning potential is around 20.7 million Rand, assuming a 6.5% annual salary growth. So if you don't have disability cover in place, you risk losing 20.7 million Rand. Now, a lot of this time, if you're sitting with your financial advisor and they do this sort of projection for you, you would be pushed to take 20.7 million Rand in disability cover, which can be really, really, really expensive. However, there are products available right now where you can cover your monthly income. Now, you can still cover that same 20.7 million Rand, but the premium drops when you cover yourself, or your disability cover is on a monthly income protection. It drops substantially. Now, I can't really give you prices on this because it happens on an individual basis, dependent on your career, the level of risk with your work, how much time you spend on the road. It depends on your education level. There's a whole bunch of risk factors that are considered when the pricing model comes into play. But if you do have lump sum disability, please consider income protection in the form of disability that you take. Personally, I have cancelled my lump sum disability in favor of income protection, mainly because my lump sum disability said that only if I am disabled or hurt or somehow my body is damaged for a minimum of 30 days, that's the only time my disability cover has paid out. And I moved my disability to a monthly income protection that says that if the doctor puts me off for whatever reason, my body cannot function for 7 days. I cannot see clients. I cannot sit in front of the computer doing my work. My income is protected. So if I'm down, if I get coronavirus and I'm put into quarantine for 3 weeks, my salary is covered for 3 weeks or until whichever time I'm able to go to work. And that's what I have covered myself for. It's a far cheaper option than the lump sum cover that most likely you would never claim for anyway. You're more likely to being put off work for 7 days or so compared to 30 days or more. So if you haven't had a quote of income protection, please contact me. I will consult with you over the phone. Income protection is being done in most cases, depending on your circumstances, without medical underwriting during this time. Now, this is an important thing I want you to understand right now, is that Liberty has suspended their income protection products. And now, obviously, for a company to take such a decision, it's a big decision to take. They had a lot of information at hand. Okay, there are other companies providing this service, so please contact me. It's not it's not something popular that people look at, but please consider this option. It is something to really help bring down your monthly premiums. That will make your premiums more affordable. That's what it's done for me, and I hope I'm able to do that for you as well. Another thing for you to consider is future income protection. Now, future income protection gives you the ability to increase your cover at by certain levels based on certain events in your life or your income earning potential later in life. So you take a lower cover now. And depending on your age and your qualifications and your income, you take a lower cover just to get in the door when the underwriting requirements are much lower and your risk is much lower. So enjoy your cheaper premiums. And then you have your future protection cover in place where you can say at a later stage, I want to increase my life cover, I want to increase my income protection, and I want to increase my dreaded disease. And you can do that in the future without any medical underwriting. So consider these options as well. 2 additional options in place where you can have lower premiums, enjoy lower premiums now, and enjoy greater cover in the future. So those are actually 5 things that you can do when you can't afford your insurance premiums right now. So I hope this episode gave you some value, gave you some insight into the options that you have during this time. And please feel free to share this information with your friends or family that are struggling to keep up with the insurance premiums during this time. Consider these options with your personal financial advisor. Obviously, it's going to be somebody that you trust. Hopefully, your financial advisor is somebody that you trust, and it's not somebody that's trying to sell your product every time you see them. So consult with them, look at your options, look at your income, where the money is going, and if you really can't afford life insurance during this time, consider one of these options that we've discussed in this episode. If you do not have a personal financial advisor, I am available to consult during this time via Zoom or Skype. Just drop me a line. It's Yolanda at financiallyfabulousfemales.com. And we can set up an online appointment and I can give you the best advice for the situation that you're in. Also note that with this episode is not deemed as financial advice. It's basically to give you insight into your options. Before you take any financial decisions regarding your policies, do not go on this advice alone. Speak to your advisor. Consider all of your options. Your advisor needs to give you advice based on your personal circumstances and his insight into your various portfolios, and then take a decision. Do not take financial decisions based on the information on this podcast alone. All right, so that's it for me on this episode of the Wealth Nation podcast. I hope you taking this downtime to catch up on our previous episodes, and we'll chat to you next week.
Thanks for tuning in. Make sure to visit our website at www.financiallyfabulousfemales.com and sign up for our free investment masterclass.